Hello and good afternoon, ladies and gentlemen. Welcome to today's virtual non-deal roadshow. My name is Noella Alexander Young, virtual event moderator here at Renmark Financial Communications. On behalf of our team, we'd like to thank everyone in New York and surrounding areas for joining us today for the presentation of Mineros SA, trading on the Toronto Stock Exchange under the ticker symbol MSA and on the OTCQX under the ticker symbol MNSAF. Presenting today is Daniel Henao, President and Chief Executive Officer. With that being said, I will now hand the floor over to Daniel.
Thanks everyone for connecting today and for your interest in learning more about Mineros SA. This presentation is titled Record Results. So I'll be talking about our present. It's called Proven Growth. So I'll be talking about our history. And I will also be talking about the untapped potential, so the future of Mineros going forward. We've been producing gold for over half a century, but most of you are hearing our name for the first time in your investment career, most likely. And that gap between what we built and what the market knows is exactly the opportunity that I want to tell you more about today. So before I start, I'm going to be making multiple forward-looking statements. I'm required to tell you that some of the aspects of what I'm about to say may not come true. So if you're having trouble sleeping tonight, you can find our full version on Cedar. It's actually remarkable how effective it is. So let's start. This is a very quick company overview. We are a 230,000 ounces gold producer with mines in Colombia and in Nicaragua. And we have a very clear path to 300,000 ounces gold production in the near future. We are delivering record financial performance fueled by record operational performance. We have a multi-decade history of returning value to our shareholders. And now we have a very clear plan of growth. So we're not just maintaining our operations, but we're actively expanding. We like to call ourselves a mid-tier producer because we are big enough for institutional investors, but at the same time, we're small enough to deliver massive upside. Mineros is Latin American focused, but we have global ambitions at the same time. We are listed in the Toronto Stock Exchange. Our ticker symbol is MSA. We're listed in Colombia. The ticker is Mineros, and in the OTCQX with the ticker MNSAF. So let me show you how we got here, because that story is actually very relevant. So we are a 50-year-old mining company. We've been mining gold for more than half a century. Our two assets have been in uninterrupted production for more than a century. We've been public since the 80s in Colombia, but only around 2021, the company went listed in TSX. So we are, we've been off the radar for most North American investors until now. Most importantly, Sun Valley Investments became a major shareholder around 2024. So everything started to change since then. That's an important institutional validation of what we're doing. We have now a very strong operational excellence agenda. We have a very clear growth vision and an ambition of becoming a 500,000 ounce gold producer by 2030. So most North American investors have never heard about Mineros, and we believe that that is actually the opportunity. 50 years of mining history, 100 years of production in our two mines, and just 4 years listed in TSX, less than 2 years working in our growth. We're starting to reinvest in our business, and I think the market is starting to notice that. As you can see, we've had an impressive share price performance. Our share price has gone up about 10 times. Our volumes are also going up. They have gone up about 5 times, and we're starting to get included in some major indexes. S&P, TSX Global Mining Index, MSCI Cold Cap, MSCI Small Caps, S&P Colombian Select, We're still not included in major gold mining indices like GDXJ, for example, and we think that's actually very interesting catalysts that are coming to our story. Mineros has been for decades a very strong dividend play. This is just the last 10 years of history, but there's decades more of that track record. In the last 5 years, we've returned about $145 million to our shareholders in buybacks and in dividends. Just last year, we returned $42 million. But we are starting to reinvest in our business, and the operational performance is starting to show the potential that we have. 2025 was truly a transformational year for the company. In December, we produced about 21,000 ounces of gold, which meant that we actually didn't deliver on our guidance because we went above the guidance and produced 227 gold equivalent ounces, more than what we had guided. And that, of course, with a very constructive gold price environment of about $3,500 an ounce, meant that we produced record revenues, about $800 million in revenue, 48% more than in 2024. And we produced $358 million of adjusted EBITDA, 71% more than in 2024. That means that we produce about $1 million of adjusted EBITDA for every single day that we operated in 2025. We did that, delivering very strong returns to our shareholders, $42 million paid, $30 million in dividends, and $12 million in buybacks. And the market is starting to notice us. We outperform 98% of all companies listed in TSX. And for the second consecutive year, we are the top performer in our Colombian exchange. Despite that, we are still remarkably undervalued. We are trading at about $1.7 billion Canadian. That's about $1.3 billion US. And remember, just last year, we produced about $800 million in revenues. So less than or around 1.5 times EBITDA revenue, sorry. So there's a very strong value proposition that we have here. We finished 2025 with $108 million in cash, account receivables from our refinery, so practically cash equivalent of $26 million, and a very clean balance sheet with almost, we're basically debt-free. So this gives us the firepower to fund the growth without diluting our shareholders, pursue M&A on our terms. So that's very important. We are starting to reinvest in our business. For 2026, we're going to be investing about $52 million in growth. We're going to be investing about $44 million in sustaining our operations. And we're going to be launching the most aggressive exploration program in the history of our company. So exciting times for Mineros. Regarding our team, like every other producer out there, very experienced management team. But I simply want to talk about our two latest additions, Maria Vallejo and Carlos Rios. Maria joined the company in December as Vice President of Growth and Technical Services. She comes from the top tier of the gold mining industry. She has held senior roles at Barrick, AngloGold Ashanti. She has worked with private equity groups like Waterton, and personally has evaluated over 100 mining assets worldwide. She's a professional engineer from Ontario, a fellow of the Australian Institute of Mining and Metallurgy. She is exactly the caliber of talent that we want executing on our growth plan. And then Carlos Rios, similar impressive track record. Carlos comes from Collective Mining, and before then he was at Continental Gold, the team that built Buritica, which is today Colombia's largest gold producer. They produce more than 300,000 of gold per year, owned and operated today by Zijin. He's already delivering very exciting results in our drilling programs in Nicaragua. He's spending most of his time in Nicaragua these days, and he's the kind of person that is helping us turn our district scale properties into ounces. So these guys aren't just incremental hires. We're recruiting them from the barracks, from the Anglo Gold, from the collective mining. So that's the kind of talent that signals what comes next for Mineros. Jumping to our operations, we have two producing assets, Colombia and Nicaragua. We have two near-term development projects that I'll talk about, Porvenir and La Pepa. And recently this week, we added another exploration asset in Colombia. We have about 2 million ounces in reserves. We have about 3.6 million ounces in resources. And as I mentioned earlier, we produce about 227 gold equivalent ounces in 2025. Our two producing mines, Nicaragua has higher production, about 140,000 gold equivalent per year, and Colombia, about 90,000 ounces. This is all gold, really. From a profitability perspective, they're actually both similar. Colombia is the lower cost mine. I'm going to be spending more time in this presentation talking about Nicaragua, simply because that's where we're seeing most of the immediate growth, and because we are constrained by time. But happy to dig deeper in the Q&A on our other assets and in other opportunities. So starting to talk about Nicaragua, we are about 230 kilometers northwest of Managua, the capital, with very well-established jurisdiction. We have a large district scale package, 460,000 hectares in properties in this part of the country. It's a district that is very, very rich from a production history. It has produced about 8 million ounces of gold and multiple more in silver and copper and zinc, but is massively unexplored. The reality is that we don't really know what we have there. We're seeing on a daily basis that a lot of mineral and gold is coming to our processing plant, but we are just starting to quantify these. So this is actually very exciting times for our Nicaraguan operations. We are right next to one of Equinox's mines in Nicaragua. Right now we have about 200,000 ounces in reserves, about 226,000 ounces in M&I resources. That supports about a 6-year life of mine. And we have a very interesting program there that we call the Bonanza Mining Partnership. This is actually a very interesting situation that we have, one that Mineros has pioneered, and it's just a very positive environment. By law, local miners in Nicaragua have the right to operate within your concession, but they also have the obligation to deliver their production to your processing facilities. If they don't want to process it themselves, the terms that we offer them are attractive enough, so they normally choose to deliver the ore to us. In Nicaragua, we have a lot of low-hanging fruits from an operational perspective. We are expanding our processing capacity. We have way more mineral than we can process at the moment. So we're going from 1,750 tons per day to 2,500 tons per day by the end of the year. That is more or less a 50% processing capacity expansion. We're already building a stockpile to support that expansion. We're accelerating our mines. We are accelerating the relationship that we have with the Bonanza Mining Partners. We're also investing in improving our recoveries. Recoveries have gone up from about 87% to about 90%. And on silver, which is becoming a very important part of our story, that's why we're now talking in gold equivalent terms. We've gone from 30% recovery to above 70% recovery now. So that's actually very powerful financial performance engine, because we've mined these ores, we've processed these ores, so the higher recovery goes straight to the bottom line as profitability. We're also improving our head grades, having better mine plans, having more controls on dilution of our own mines, and incentivizing our Bonanza Mining Partners to deliver higher grade ores. This is a very large and prolific mining district. All of the red lines that you see there are identified veins already that we're going to be exploring. For the first time in the history of the property, we are now seeing extremely high grades being delivered to our processing facilities, denominated in hundreds of grams per ton and ounces per ton. So we're treating our Bonanza mining partners as very smart miners, but also as super smart geologists. They're helping us understand what we have. And now Carlos Rios is going and chasing these areas and exploring what's underneath the current mining operations that are delivering very high grades to us. So super exciting what we're seeing in Nicaragua. Our focus so far has been in these two mines, Pioneer and Panama. Porvenir, which is the asset, the development asset that I'm going to talk next, is the red star, the one that I'm highlighting here, which is immediately southwest of our two producing assets. So this is Porvenir. This is a relatively outdated view of Porvenir. This is the latest PFS that we have published back in 2023. We're updating these PFS, and it's going to come with the updated resource statement for Nicaragua that is coming in the first quarter of 2026, so in days. But anyways, it gives you an idea of what Porvenir is. So we had about 600,000 ounces in reserves, and then an additional 80,000 ounces in M&I resources that was supporting about a 9-year life of mine. The PEA had about a 60,000 ounces gold production profile. Then on top of that, about 110,000 ounces of silver, and then some zinc. And now in the revised PFS, we're going to be adding copper as well. And the project was looking very attractive back then at a gold price of about $1,650. So at $4,000 or $5,000 gold is definitely looking very, very attractive. Again, a revised version of this is coming very, very soon. At $1,650, it was delivering a 25% IRR, a 3.5-year payback period, and a nice NPV. The project has a relatively low all-in sustaining cost below $1,000 an ounce. There's been inflation pressure in our industry, so all-in sustaining costs will be higher, and the capex to develop the asset will be higher, but will still be very low compared to most development opportunities the market has right now. So interesting, very interesting catalyst for value in the near term. We are already permitted for mine development. We're working on getting the permits for the plant construction, and then once we get that, we'll be working on a construction decision in the near term. So this is just a nice catalyst for production growth and a potential re-rate in our story. I'm now very quickly going to start talking about our other asset. This is our alluvial operation in Colombia. We have about 1.3 million ounces in reserves, an additional million ounces in resources here. That supports a 12-year life of mine, and then with the M&I resource way beyond that. This asset has been in production for over a century as well. So it's just a steady producing asset, one that generates very significant cash flow for the operation, so for the company. So it's very good for us. It's a unique asset. We're aware of another producing asset in Russia of similar magnitude and method, but that's about it. But what I can tell you is that this has been in production for over a century. It's not the erratic type alluvial mine that one could imagine. This is actually very predictable and fully drilled 43-101 compliant report. We do our reports with SLRs. With SLR, the way it works is that we actually don't operate along the river, but next to the river. So it works as a flooded open pit. That's probably the best way to describe it. But instead of trucking the ore out, we're either pumping or extracting the ore using our dredging infrastructure. And then once we extract it, we use gravimetric, basically gravity, to recover the gold. We don't use any chemicals. And then as we move north, then we start doing all the closure For every hectare that we disturb, we end up compensating anywhere from 7 to 10 hectares. All of the operation is powered by our own hydroelectrics. So overall, it's just a very clean operation. It's one that has been reliable for many, many years, and we expect that to continue for many years more. So these are our two mines, Nicaragua and Colombia, and now I'm now going to talk about our other growth opportunities, La Pepa being one of them. This is located in Chile, in northern Chile, in the Maricunga Gold District, in the Atacama region. Is a very strong mining district. We are surrounded by producing mines, by advanced development assets. So it's just a very nice neighborhood. We're starting with a very good base, about 2 million ounces in resources. We think the asset has significant growth opportunities. So this is where most of the M&I resource is. And here, as you can see, there are some inferred resources, but connecting these two circles with exploration is what we're going to be aiming at. We're also going to be de-risking the asset in multiple aspects. So doing a lot of environmental work now and starting to imagine how a mine would look like in this part of the Andes. We have something that is very valuable in the driest corner of the world, which is water rights and water that actually exists. So that's also very useful as we look into developing this asset. And last, just very briefly, this is our latest acquisition in Colombia. This is an exploration asset, large resource base. This is further in the future, and this is just potential. The aim here is actually to establish a communication channel with the communities and listening and understanding their concerns. This is an asset that has had significant issues. The community has been opposed to it in the past. It's a magnificent asset, but it's one that only the community would be able to unlock. So in the future, this is just optionality, and our objective here is just to work with them to establish our communication channel. So that's further away. So in the immediate term, this is our production profile. So in 2024, we produced about 210,000 ounces of gold. Last year, we produced 222,000 ounces. And then this year, we're guiding about 230,000 ounces, so 10,000 ounces more. I think this is actually very conservative. We're working very hard to deliver beyond this, but this is what we guided to the market. And now we have immediate catalysts like Porvenir that will take us to about 300,000 ounces or more. We're also working aggressively on inorganic growth opportunities beyond the initiative that we call the quick return ounces, which is what I described to you earlier in terms of the ounces, the extra ounces that will come next week, next month. So we're working in improving recoveries, in improving throughput, improving head grades, both in Colombia and in Nicaragua. That's the agenda today. We're working very hard on these things to take advantage of the amazing gold price environment we're living. And just like everyone else, we're working aggressively, systematically evaluating every single M&A opportunity that the market has. We were initially focused on gold producers. We wanted to add a third producing jurisdiction for Mineros. Adding 100,000 ounces in a third jurisdiction is something that we want. But at the same time, we want to stay disciplined, and we're very careful with our per share metrics. We don't want to grow for the sake of growing. We're seeing that there is already significant foam in the market. People are paying very significant prices for producing assets. So we're only going to invest and grow it where we see a proper value proposition. So we're assigning the resources to evaluate what the market has, but we are staying disciplined. We're seeing more opportunities in late stage development assets that have permits or are very close to being permitted, that have feasibilities on them. There's still exciting value propositions there. So that's the focus now. We're evaluating some producing assets, but concerned about the valuations. But in terms of developers, there's still significant value. So that's a big part of our focus. And of course, we'll take advantage of the right exploration opportunities that come. There's something, that is just a very attractive valuation and a high quality asset. We are building a pipeline. So we're working not only in what's coming next month, next year, but also what will come in year 5 and year 10. So it's important to start building a pipeline for Mineros. We're working other initiatives like re-domiciling the company to North America or to Australia, to Europe, and we want to use our balance sheet, our very strong and robust balance sheet for M&A, not necessarily our stock. We feel that we are still remarkably undervalued. So we have the dry powder to act for the right opportunity. So in summary, we are deeply undervalued. We're trading at about 1.5 times revenue. We actually need to update this. We are trading at about 4 times EBITDA, and the part that I want to highlight here is that these are revenues and EBITDA that was produced at $3,500 gold. We are trading now at $3,500 gold. So there's still a lot of re-rate potential. There's momentum, and we believe that momentum will continue as we continue delivering record operational performance, which at the end of the day translate into record financial performance. So as I mentioned, last year we generated $800 million in revenues. We delivered $360 million in adjusted EBITDA, and we're growing. We are also reinvesting in our business. We have the Porvenir expansion, we have La Pepa, we have all the things that we're doing in Nicaragua that will deliver further growth beyond the 300,000 ounces. So we are working in a very disciplined and aggressive way in achieving our internal goal of becoming a 500,000 ounce producer by 2030. We have deep regional access and expertise. So we feel that we can unlock a value where many other mining companies may struggle. So that's a value proposition. We are, the way I like to describe it is that we are actually a package deal, because we are a steady producer, one that has been in production for 5 decades. We are a developer. We are developing new assets, and we're also an exciting exploration story. We are executing on a 100-kilometer drilling program this year with our existing infrastructure. So it's actually very low cost exploration because we own the rigs. It's just a very nice setting to unlock value for our shareholders. So this is the story about Mineros. Yeah, so this is it. If you have further questions beyond the ones that I can answer in these coming minutes, this is Ann Wilkinson's contact information, and I'll be happy to coordinate a call to follow up on those as well.
Thank you very much, Daniel, for the presentation. We'll now begin the Q&A. Your first question is, given the long regulatory history with most recent acquisition near Tolima, Colombia, and the fact exploration was suspended, why put money towards this new asset instead of organic growth? Is there a strategy the company feels they can achieve better than the previous management?
Yes, the answer is yes. We think that we can do things radically different to the previous approach. In that particular asset, is something in the future that's not, it's not going to affect our immediate plans. And the key here is actually the community, the government, establishing a relationship and a dialogue with them, and only they will be able to unlock value on this particular asset. So that's something that is not going to be our immediate focus beyond establishing those relationships that are very important, and just talking with the community. As a Colombian company, I think we understand better our communities, and we can, as I mentioned, we will simply have a very different radical approach. We're not thinking in the biggest mine or anything like that. Our expectation is not to build a 1 million ounce per year mine there as the previous owner had. it will be something completely different, much smaller, most likely. But that's, we're not even talking about a mine there yet. Our aim is to establish a relationship with the communities, and only after that see what we can do. As a company, we're focused on our production right now, our two producing assets, our immediate development opportunities in Nicaragua and in Chile, and that's our focus at the moment.
Given the timing of your acquisition, do you have reason to believe that permits are close to being obtained?
No, the answer is no. The community already indicated that they didn't want it. That was in 2027. They didn't want it a very large mine there. As I mentioned, that's not. We're not going to be insisting on doing the same thing. Our approach will be radically different, and it would be one that would be built first with the community. So we'll be focused on establishing a relationship with the local actors, and only after that, and if they think that something can be done, we would consider doing anything. But that's, we're starting with establishing that relationship with them.
Will Anglo Gold hold any royalties on the project once the acquisition closes?
No, there's no royalties here.
What factors led Mineros to pursue La Colosa at this stage, given the project's long-standing permitting and social challenges? And how does management see La Colosa fitting within Mineros' broader long-term production profile?
This is, as I mentioned, we're going to have just a very different approach to the previous operator. Our approach is going to be with the community. We're not going to be, sitting in Bogota talking to the president or the ministers. Is going to be sitting with the people, with mayors, and establishing a relationship. We'll start there, and we'll see where we get. But at this point, the priority is actually working with them and starting a dialogue with them.
Once the acquisition closes, what are the next steps towards permitting at La Colosa?
That's down the road, and we will only pursue permitting with the community support. If they do not support this asset, we won't try to go beyond them or above them. So the first step is to establish a relationship with them, dialogue with them, and just after that, we'll think about what comes next.
At Porvenir, what are the remaining technical or permitting risks before the expansion can proceed?
So in Porvenir, so just to remind everyone, that's southwest of our two producing mines in Nicaragua. The next major milestone is the permits for the processing plant. The mine is already permitted, so we could start mine development. We are, in fact, already starting to, prepare teams and potentially start doing some surface work to start developing the mine. The next major catalyst there will be the permit for the processing plant. We're expecting that this year. And after that, we're already doing a lot of engineering, detail engineering work. So we will be prepared, I think, by the time we receive the environmental permit for the processing plant to have a construction decision. Our team is there, our infrastructure is there. We are ready to act on it very, very quickly.
What would you say is the NPV at Porvenir, assuming cost inflation since the PFS and assuming current metal prices?
So that's not yet public information. All I can tell you is that it's going to come in the coming days. I think we're aiming to release that by the end of this month. So stay tuned for that. We're going to be working in a lot of optimization beyond what we'll be releasing. The current work comes from the previous vision of that the company had for the asset. So relatively, I would say small. We are already seeing a lot of exploration upside. So we are investing already in drilling at Porvenir so we can make a bigger project. But the updated PFS that is coming within days will have pretty much a similar situation of what was presented back in 2023. Simply adding a new copper recovery circuit at the very beginning. That will help us produce a copper gold con, and then similar circuit as we had in the past. So a few optimizations, but the bigger vision will come with a revised plan that we're working on right now. So the updated numbers will come within days, and perhaps we can do a follow-up conversation about Porvenir once those numbers are out.
What do you see in La Pepa that Pan American Silver didn't?
We like the district a lot. I think Pan American had different plans, just a different strategy. It's a relatively early stage asset, so it's still years away from production. We're working on a timeline. It was just not a priority for them. I think a big part of it was gold price as well. With gold price going up, we thought it was actually a very good opportunity. We saw what was being done just adjacent to the north of us with the Phoenix now mine owned by Rio 2. We thought that was actually a very compelling opportunity. So we decided to exercise a offer that we had on this property, and we added as a pipeline asset. We are allocating the resources to hopefully make it a construction decision in the near future.
Please give us more information for potential redomiciliation and what it means for investors. And does the company want to delist from the Colombian exchange?
Right now, the way we structure is that we have the Colombian public company that is listed in TSX, is listed in OTCQX, and is listed in BBC in Colombia. That company owns the operating assets, but there's certain friction of having a Colombian holding company, especially with the North American audience, with U.S. investors and Canadian investors, significant withholdings. So we're looking at ways to be closer to our shareholders, to remove some of that friction, to get to a more to a deeper capital markets. So we become more of a normal opportunity compared to our peers. So we will continue being a Colombian company. Our team will continue being here in Latin America, and we will continue being a BBC listed company. We don't want to change that. I think it's important to have access to the Latin American market. The Colombian exchange is actually integrating with Chile and with Peru. So that will give Mineros access to a deeper pool of investors. So I actually think there's a lot of value of being BBC listed as well. We have a lot of investors in Colombia, and that helps us as well, being a Colombian producer. So that's the answer to that.
What steps are being taken to broaden institutional coverage?
So that's an important initiative as well. We have a lot of local coverage in Colombia. Several banks cover our story. As I mentioned earlier, we've been listed here since the 80s. Everyone in Colombia and in Latin America have heard about Mineros, but we're very new in North America. Right now we have coverage from SCP, from Sprott Capital Partners. We have coverage from Atrium. We have coverage from Red Cloud. But we want to strengthen our analyst coverage, so we're constantly engaging with other banks and reputable analysts so they get to know us and review what they think and write about it and give you all comfort on what we're doing. So that's something we're working on. It's work in progress. I think we're making progress. A year before we had a lot less. So it's happening, but it all takes time. It's part of a series of initiatives to help attract interest from the North American and European investment community.
Thank you very much, Daniel, for all of your insight today. If you did not get a chance to submit your question, you can reach out to the appropriate account manager here at Renmark. That concludes our presentation for today. Before we go, I will turn back the floor to Daniel for final remarks.
I want to leave you with this. Mineros is a 50-year-old gold producer that North American markets are just discovering. We delivered $800 million in revenues, $360 million in EBITDA last year, operational records, financial records. We delivered $42 million to our shareholders while maintaining a virtually debt-free balance sheet. Our share price is performing well. We have good momentum. But I think what makes us interesting right now is that we're trading at very attractive valuations at about 4 times EBITDA, less than one or around 1.5 times revenues. And these are EBITDAs and revenues produced at $3,500 gold. So at $5,000 gold, things are looking very, very well. We have a clear and well-funded expansion plan that will take us to about 300,000 ounces, and a pipeline of advanced exploration assets that we expect to take us beyond that. So record results, clear growth, still undiscovered, and that I think is the opportunity. So again, thank you very much for your interest, for your time, for connecting today. I look forward to giving you more updates as we execute on our promises. Things are looking very interesting, and I look forward to maintaining a very open and constant dialogue with all of you.
Once again, this was Mineros SA, trading on the Toronto Stock Exchange under the ticker symbol MSA and on the OTCQX under the ticker symbol MNSAF. Thank you to everyone in New York and surrounding areas for joining us today. Please stay tuned for other presentations in your area and see you next time.